Yes.
Well, I'm really sad because this is our last Smart Investing series. So, very last one. Next week, Dolores Hydock will be here to tell stories. I think the name of the show is called Honest Spree. So, we'll hear stories about people and money and what happens when they have it and when they don't. But tonight, we're going to talk about fraud, prevention, and record keeping. So, two different things. You should all have your handout with the slides so you can make notes and a survey. Please fill those out. They really help us plan for future programs. Also, back in the back, we have copies of the May calendar and a flyer for the Monday Morning Investment Club. We were trying to find a way to keep smart investing moving forward into the future, and we came up with Monday Morning Investment Club. We'll meet every other month on a Monday morning, and our dates are right here on this flyer. And the group members will kind of vote on what they would like to hear about. So coming up, I'm working on getting some area professionals to come in and talk about the basics of investing. So we'll kind of go over mutual funds again and what a brokerage is and how accounts are set up and how they work and things like that. And then we'll decide on programming for the future. So I really hope to see you. The next one's May 21st, so that's just about 2.5 weeks away at 10 a.m. And I'd love to have you. And the day before, May 20th, is our summer reading kickoff. And we do have adult summer reading programs. We have a lot of fun, and I really hope that I'll see some of you at those programs. And now, yes, this is our director, Sue DeBrack.
I want to thank y'all for coming. This has been a terrific series. Katie and I were part of going to be acting as consultants because we have a group of 5 municipal libraries in Jefferson County, 5 municipal libraries in Shelby County, and 5 branches of Birmingham Public that are also going to try to apply for this grant. It's been a terrific grant. And I also want to say that Katie got an email today from American Library Association, and she's going to be, they asked her to consult with Milwaukee, Schaumburg, Illinois, and Santa Clara, California. So, Katie, congratulations.
Well, now I'm going to tell on you. I don't know if y'all know this, but our director just received the Eminent Librarian Award at the Alabama Library Association. So now I'm telling on you. That award's not even given annually, so you have to be a worthy nominee. So congratulations. But really, enough about me and Sue, because thank you for being here. I mean, I really do appreciate it. It really means a lot, and I'm glad that we can serve you in some way. So thank you so much for coming to these programs. I'm going to turn it over to Dr. Ratterkus. Let me turn it down.
That's why I shouldn't turn on my microphone. The other one is turned off.
Here we go. Okay. All right. Well, I have to tell you, I didn't win any awards. I'm sorry. So you're going to have to listen to me now anyway. Well, I'm sad that it's the last time. I mean, I had a great time coming here every month, and I'm glad that there was always a pretty good turnout every Thursday that I was here. And I hope it wasn't just for the food. So, so we got one more topic to talk about, and it seems a little bit trivial based on what the other things were that we talked about, but this is actually very important. Now, it's fraud prevention, record keeping. I'm actually going to do record keeping first and fraud prevention second. As you can see, I don't have my usual disclaimer here tonight because I'm not talking about investments. I'm just talking about basic things. What kind of records do I need to keep? And how do I make sure that I don't get taken by somebody who's trying to get to my money? And that's probably the even more important part of the evening is, okay, what can I do to make sure that I'm not a victim of some sort of scam? And also, if I think that I am, what can I do to prevent it and to make sure that nobody else is going to be in the future? But let's start with the record keeping. Generally speaking, nobody's going to tell you to keep any records. Now, the IRS is going to tell you you're going to have to keep some of your records for up to 3 years if you would be audited. They can audit you up to 3 years if they think you just made a good faith mistake in your tax returns. If they think that you actually on purpose underreported your income by more than 25%, there's no statute of limitation. They can audit you 50 years from now if they find that out. And then you would still have to produce those records. Generally speaking, we say keep them for 7 years, just to be safe, your tax records, so that you can prove everything on your tax returns to the IRS. Now, for most of us that are salaried employees, it's very difficult to underreport your income by 25%. That's more for self-employed people. There's a much more of a chance that might happen. If you are a salaried employee, that's really not likely to happen that's going to be underreported. It's much easier to spot too because you get your W-2 and you know exactly what you have. But you need those income records, and you need your expense records. If you have tax-deductible expenses that you claim on your tax return, you're going to need to keep those records. And the chances that anybody ever is going to get audited are very, very small. Now, if you get a $1,000 tax refund, the IRS is not going to come after you to make sure that you got 1,000 instead you only should have gotten 500. It's not worth their time, it's not worth their money. They have much bigger fish to fry. So the vast majority of us are never going to get audited ever. That's just going to happen. But nevertheless, you never know. And sometimes they're just draw names. I mean, sometimes it's just a basic luck or not luck of the draw, that they might just say, okay, let's just pick a few people and your name might be drawn. That is possible, not likely. It's actually very unlikely, but it can happen. So you should have those records because it's going to be a major pain if you have to reproduce those records for the IRS, and they will ask you for those. Now again, good faith, up to 3 years. If it's more than that, if you are reporting your income by 25%, they can come to you, normally come within 6 years, but there's really no statute of limitation to that. You want to keep detailed records of your home improvements, because there might be a tax deductible. There's also, when you sell the home, you want to be able to prove that you spent X amount of money to improve the home, as far as the assessment of the home is concerned. And again, you need all these things to prepare your tax returns. The more documentation you have, the easier it is to prepare your tax returns. If you have last year's tax return, it's much easier to prepare this year's tax return. Obviously, with tax software and things like that, things are a lot easier. Though these things are just, you have an electronic file of last year's tax return, and it just carries over in the new one. But still, you should have hard copies of these things. Don't just keep a file, an electronic file. It is a good idea to also print out your tax return and put it somewhere. We'll talk about later where these things should go. These are kind of like the basic records that you have in terms of income. All these different kinds of income that you can have. Again, for most of us, it's going to be a Form W-2. That's where our income is reported. You want to keep those. There used to be a time when you would actually have to send them in with your tax return. You obviously don't do that anymore. You can electronically file your taxes, and even if you mail them in, which I don't recommend because it takes a lot longer to get the refund that way. But even if you mail them in, you don't have to actually send in a W-2 form. You don't have to actually send anything anymore with your tax return. All of these things are going to be electronically transmitted to the IRS by whoever issues those. That's so the W-2s, now the 1099, they will ask for them. They're not automatically sent, but they can ask for them. Now, you always have to remember, if you receive one, That means somebody else is claiming what they're paying you as an expense. Which means that if you think, oh, it's a 1099 form, no foul, no harm, if I don't tell anybody, nobody will ever know. The person who actually sends you that 1099 is going to claim that as an expense on their taxes. So the IRS might double check and see where that money actually went. And the same is true for all of these, for brokerage statements, mutual fund statements. They're double checked. So just because they just sent them to you and you don't have to send them to your IRS doesn't mean they won't find out about it. So you want to keep all these sales receipt, invoices, canceled checks. A little later we talk about how long you're actually supposed to keep all these things. Don't keep everything and then 10 years from now you have like a whole room full of files and sales receipts and all that. There's no need for any of that. There is things that you can do. For example, a sales receipt, as soon as you see the actual sale show up either on your credit card statement or your bank statement, and it's correct, and you double checked it, then you don't need it anymore unless you need it for warranty. Then it's a different story. If you needed to keep it for warranty, that's a different file. But if you just want to check that you're able to check your bank statement, make sure everything is correct, the moment you see that, you don't need it anymore. If you get a monthly statement and an annual statement, once you check, or a quarterly statement, once you check your quarterly statement against the annual statement, you can get rid of the quarterly statements. There's no reason to keep a monthly and a quarterly statement if you have an annual statement. But you want to keep them until you get that annual statement so you can make sure that everything on the annual statement is correct as far as what you got in the monthly or the quarterly statements. There's no reason to keep all of these. Then that just creates a lot of paper, and you really don't want all of that. For your property, closing statements, proof of payment, insurance records. All the things I talked about, they come up if you want to sell the property. There's all kinds of different documents that you're going to have to produce. And it's always a good thing if you know that you have them, and even better that you know where you put them. Because a lot of us have all of these things. So I should probably not throw this closing statement away. But then, 5 years down the road, say, what did I do with it? I know I have it. It's one of these moments when you think about it and say, I saw it the other day and I was thinking to myself, it really shouldn't be there. and then you just move on, and then you think about, where was it? So record keeping is two things: is actually having the records, and second, knowing where they are. That is just as important as keeping them. Proof of payment. When you make a cash payment, what's the amount, payee's name, transaction date? These are just things that you write down when you do it in your checkbook. For example, you can write these things down. So you know who you made payments to, check number, check amount. Again, all of these things you only need until these transactions clear. Once they're cleared, you don't need them anymore. Again, you go to the grocery store, you get a receipt. Don't keep a year's worth of receipts from the grocery store. There's no reason for that. Now, some of you might want to have a record of, okay, what did I spend on this part, on this, and this, and this, and this. That's fine. There's software for that. You just type it in, you throw away the paper. There's really no reason to have shoebox after shoebox with these kind of things. It just gets very messy. Debit or credit card. Again, if you charge something to your credit card, make sure that you keep the receipt until you see it on your statement, and to make sure that you're being charged the right amount, and that you know that when there is a charge on your credit card that you do not recognize, that you actually know, yes, I did not do that, and not like, I don't remember, but I might have done that. That's not a good strategy. You really want to know, what did I spend, what did I charge on my credit card and debit card, so that when there's a charge showing up on your statement, that you remember what it was. Electronic funds transfers, those are direct debits that, direct withdrawals. If you send money to somebody, or you have a direct withdrawal agreement with, the Alagasco or Alabama Power or something, or your phone company, just making sure that they only take what they're supposed to be taking. And they do that. I mean, that's not the issue. It's not that you have to be afraid of Alabama Power. What you do have to be afraid of is somebody hacks into Alabama Power's computer and gets your information, and then under the name of Alabama Power withdraws money from your account. That's why you want to keep an eye on that. So you don't, I'm not telling you don't trust Alabama Power or Alagasco, that's not, you just have to make sure that they only get money from you once a month. So if they take money from you 2, 3, 4 times a month, something's up. That's what you have to keep an eye on. And payroll deduction, anything that's coming out of your payroll, again, you want to keep a record of that and make sure that you recognize it and know where it's going and who's getting it. Specific records to keep, and you have the handout. You can look at all of these. These are all very important things that you should keep note of. Any of these things you really should. Any of these records you should keep. Again, some of them longer than others, but you don't get those in the mail and then you just throw them away. You should keep a record of them. Here we go. How long do we actually have to keep them? And I went through this, and I don't want to spend too much time on it, but for example, your brokerage statement, once you do not have the securities anymore that are showing up on your brokerage statement, there's no reason for you to actually save that statement. Once it's gone, it's gone. I mean, maybe you feel nostalgic about it 5 years from now and you want to look at it, that's fine. But there's no reason, again, to clutter up your house or your files with all kinds of information that you really don't need and you ever look at it. I'm guilty of that, and probably most of us are. We're keeping a whole bunch of stuff and we never look at it. It's just like the same thing that you do every year, at least I do when I think about, I want to donate things to, Jimmy Hale or something. So I go to my closet and say, everything that I have not worn in the last 12 months, I'm probably not going to wear anymore, so I can as well give it away. And that's pretty much the same thing with your records. Just think about it. When was the last time I actually looked at the brokerage statement from the year 2000? And I probably have not done that in a long time, and there's really no reason for that, because that was 12 years ago, and it's not relevant anymore unless I bought securities in the year 2000 that I still own today. So I have a record of how much I paid for them and when I bought them. But if I don't have those anymore, there's no reason for me to actually hold on to this. And a lot of brokerage firms, they have all these things online now. You've got to check how long they keep these statements online, so you don't have to keep them. But they're sometimes only give you 5 years or maybe 7 years of statements, which also tells you that's probably all you really need. Property statements, you wanna keep them not only while you're having the home, but about 6 years until after selling the home, if something comes up, particularly with taxes in the process of this. So some of these things you want to keep. Retirement savings plans, I said, you keep the quarterly statements until you get the annual statement. You cross-check them, you discard the quarterly statement. There's no reason to keep this. And I already talked about the taxes earlier. Where am I going to put? Yes.
I want to ask a question about retirement accounts, statements for accounts that you can roll over. The rollover things. I mean, do you keep the once they roll from one company's account to another company's account? Do you have the ones from the original?
No, once they're rolled over, you make sure that everything that you rolled over actually got there. Then the other account is closed. Okay. So you're basically keeping a record of a closed account. Okay. So again, for tax purposes, you want to keep it for 3 years, but after that, it's not relevant anymore, because this is the account now that you're looking at. So if you're making withdrawals from that account, that's the one that matters. The one that you had previously doesn't matter anymore, because you don't even have it anymore. So just making sure that everything that you rolled over where it was supposed to go, and then you don't have to worry about the old one anymore.
Some future date, they're not going to say what was the original value of this account. The original value was the value of the account as it went into AmSouth's or Regions, I guess, thing, instead of some other banks?
Well, if it is an IRA account, the increase in value is not relevant for tax purposes. You're not taxed on the capital gains, so you're only taxed on the withdrawals that you take.
Yeah.
So therefore, the IRA account doesn't matter. It's different if it is not an IRA account. Again, if it is a security that you bought and originally at this price, and then you transferred it someplace else, you want to keep the record. At least the record the sales record, where say, okay, I bought this security at this price, at this date. So you know exactly what the original cost was, because if you have to pay tax on the capital gains, it's going to be based on original cost of the security. So if it is something like that, yes, you want to keep the document of that security purchase, regardless of who you purchased it with, because you need to know not so much who you bought it, with who your broker was, but how much you paid for it, so that when there's a capital gains calculation, you know exactly because in your tax records you're going to be asked for that. They're going to ask you how much did you pay for it when you originally bought it, how much did you sell it for, and based on that they're going to determine the taxes that you have to pay. So those you want to keep, but for an IRA account, because you're not taxed on the capital gains, you don't have to worry about that. Safe deposit box. You can rent one at the bank if you want to. That's probably not a bad idea. You're just going to have to think about what's going to go in that safe deposit box. Sometimes people just have a safe deposit box in their home. It's not quite that safe if somebody can easily just take it with them. Because just because you need a key to open it doesn't mean you can't open it some other way. So that's one of the things about a safe deposit box that you have in your home. If somebody breaks into your home, they can just take it with them. Now what you want to have is, you still want to have something like that in your home that is fireproof in case there is a fire. Not every file that you have, you want to put in a safe deposit box. That's where I got to the active file was the permanent file. Some records you don't need every day. Like the birth certificate, for example. It's a very important document to have, of course, but you're not going to look at it every day. But you want to have it at a safe place. You might want to put it in a safe deposit box. You're not going to need it on a daily basis, but you know it's safe, and it's not going to, if somebody breaks into your home, it's not going to get stolen. Now you know it's at the bank or wherever else you're going to store it. Those are your permanent files. Now you're also going to have an active file, where you have things that you actually look at, your current records. As I said, like you have your quarterly reports from your brokerage account, and you're waiting for the annual report. You're obviously going to keep those at home. You still want to keep them safe somewhere, just in case something happens. If you have them online, which a lot of us now do, make sure you have a backup. Make sure you backed up those files. Crazy things can happen to your computer without you ever expecting it. One day you're just going to turn it on, and this happened, at least happened to me before, and all you hear is like 3-4 beeping noises, and that's the end of your computer. Now that's the end of your hard drive. And also the meaning that I had that, and it was not recoverable, and all these kind of things. Sometimes you learn these things the hard way, but you need to back it up. There's ways, right now, these days, you can get just a little flash drive for relatively little money. For $30, you can get a 1 gigabyte flash drive. You don't have that many records. Even people that keep everything they ever had do not have a gigabyte worth of records on their computer. So that's plenty of space just to back it up and keep that somewhere separate from the computer. Just do it regularly, or do it. There are places online where you can do that. You have to pay for those, of course. Or if you have a household where you have a server, because you're having all kinds of different computers. I have a server in my house to accommodate everybody. And these are not expensive either. That's like a $300 thing. But you have some extra backup for your computer. You need to have that. Just because it's your computer doesn't mean it's going to be there for the ages. Crazy things can happen to your computer, and you will never suspect it. The problem with computers is it's not like cars, where first they make a noise, and then and then they start stuttering, and then at some point they break down. Your computer just decides to die, just like that, from one day to the next. It shouldn't do that, but it happens. And again, all it does is you boot it up and it goes beep, beep, beep. And then you get, depending on what it says, if it says error, I forget what the dreaded error number is, like 15 or something, your computer's toast. There's nothing, cannot be recovered. There are some tricks that people have. One of them apparently is if you freeze your hard drive, and then if it's frozen, there might be a chance for it to be accessed. So there are apparently certain tricks that computer people have. But generally, if your computer is gone, it's gone. When the hard drive is gone, it's gone. So you want to have a backup. When you get rid of records, ideally you should shred your records. Don't just throw them in the garbage. At least tear them up. Now, if you don't have a shredder, again, you can get shredders that you put on top of your garbage bin, and they're not expensive. You can get them at Staples or so for $20, and they're going to shred everything that you throw away. Because you don't know who is going to look through these things. It's not that somebody might go to your garbage can. It might be that somebody goes to the actual go to the disposal facility, go out there and look through the garbage at the big garbage place. People do that. I mean, you would be surprised, but people do that. If you have the records that are not properly shredded, somebody can find out maybe a social security number, find out your address, find out a credit card number. There's all kinds of information that they can get. And how often have we read about a company that just threw employee records in the garbage and somebody found them and used them? You should not do that. You should be very careful about what you throw away. So make sure that when you throw something away, that at a minimum you tear it up. Yes?
The junk mail you get with that says you food, credit cards and whatever, with your name and address and everything, should all that be shredded also?
Well, they don't have your social security number. They know your name and your address because they buy these address lists from other providers. So you should always tear them up. Just you don't have to shred them. Just tear them up, just to be safe. You don't have to shred them to confetti. But if you just tear them up a couple of times, that will be good enough for those kind. Because there's no other than your address. There's no really sensitive information on those. They want that information from you. That's why they sent you that. But it's not on there. They don't have that. So, but your credit card statement has your credit card number on it, for example. You don't want people to know what that is. So, and you don't want people to know how much money you have for that matter, or how much you owe for that matter if they look at your credit card statements or your bank statements. So you really want to make sure that you discard those in a way that if somebody came across them, that they would not know what to do with them or could not use them in any way. Okay, that's the record keeping. Again, the most important part is that you keep good records. Don't keep them excessively. Just think about them when you look at your files. What do I still need? And again, if you had something for 7 years, unless it's securities that you bought and anything regarding your home, you probably won't need it anymore. You don't need to keep bank statements for years and years. There's no reason for that. There's no reason to keep those. If you just keep up making sure that they're correct every time you get one, you can discard the one that you had the month or the quarter before. If you're just making sure that all the information is transferred properly, then there's no reason to keep a bank statement from 5 years ago. If you still have your bank statement from May of 2006, there's no reason for you to have that. It serves no purpose whatsoever. Because even if there had been a problem with your statement in May of 2006, it wouldn't do you any good anymore now either, because it's been too long ago. So therefore, don't keep all that stuff. Once you get an updated bill, if you get an updated statement, and as far as bank statements are concerned, once you get an annual summary, you can throw away all the quarterly summaries and so on and so forth. So that and then when you get the next annual statement, you can throw away the previous annual statement and so on and so forth. There's no reason to keep all these for years and years and years. Certain tax documents that you have to keep, and you want to keep obviously all your insurance information, all your property information, all that, and again, keep it somewhere where you know that it is. That is a very important part. Yes?
Is that the same rationale for remember when checks were prevalent, before we paid otherwise? So if you have canceled checks from, let's say, 5 years ago, can they also be discarded?
Yes. At that point, if somebody had, the check would not be good anymore, so if somebody would count, with that date on it or something, they wouldn't take it anymore. And so, yes, you would have to do the cancel checks to make sure that you keep the check, so that in case something happens, but no, you can but shred them. When you throw away a canceled check, and again, you don't get canceled checks anymore because it's all done electronically. Even if you pay with a check, it's all done electronically now. They're scanned. That's why your checks clear a lot faster than they used to. So you don't get canceled checks anymore. But if you still have them, once you cross-check them with your bank account, with your bank statement, there's no reason for you to keep them anymore. Because then you know they're on there. That's all the reason why you keep them, why you want to have them back, or wanted to have them back, to make sure that what you wrote on the check is the same as what's showing up on your bank statement. Once you check your bank statement against the checks that you wrote, there's no reason to keep the checks. Same with debit card transactions. Once you do a debit card transaction, you see it show up on your account, you make sure that it is the same as what you have on your piece of paper, you can throw away the piece of paper. Because now it's an official transaction, there's no reason to keep it anymore. You checked it, the bank is not going to come back and change it. So, yes?
Does that still apply like to donations for your tax purposes?
Well, donations are tax records. So if you made a tax-deductible donation, you should keep them at least for 3 years in case you got audited because they think there might be something wrong to just pick you arbitrarily. Probably tax records, as I mentioned, you want to keep for 6 years because they can come up to 6 years if they think that there's something strange going on. So, but normally you don't have to keep anything more than 6 years when it comes to tax records, except again for property records and insurance records. And you want to know where they are, and you want to tell somebody else too, not some stranger, but somebody else, that if something happens to you, that there's somebody else that knows where the records are. Because that's one of the biggest things that we see, that there might be a death in the family, God forbid, and somebody's looking for the records, maybe a life insurance policy or the retirement or whatever it is, and they don't know where they are. They never looked at the records, they were never told or never asked where the records are kept. And you need to produce those records. So you need to know where they are. So it's not just you needs to know where the records are. There should be at least one person that you trust that also knows where the records are, so that somebody can find them if they need them and you're not around. That's very important. Yeah.
That is so important, and having followed after my parents and tried to reconstruct their lives and everything that's going on there. I keep a file in our little lock safe at home and a copy of it in our safe deposit, and it says, here's where our stuff is. And it just, insurance information and where the important files are and just anything like that they're going to have to know where the money is and find it. Have it somewhere where they're going to find it. Really obvious. That's so true.
Absolutely, and especially, there's a time of distraught at that point, and the last thing you want to do is, basically search the house from top to bottom to find the records that you need. So record keeping is one, actually keeping the records, and second, equally important, knowing where you keep them and let somebody else know where they are, because that is going to be very helpful for somebody at some point. Now again, Don't put a poster outside your home. But just tell somebody that you trust. Now, let me move on to this because there's a lot of people that become victims of financial scams, and I promise you that everybody who becomes a victim said, "Oh, that's never going to happen to me." $40 billion every year is about the cost of financial swindles every year. Nobody is immune. Everybody is targeted. Everybody, in terms of level of education, level of income, it doesn't matter. You're going to have to be able to spot them and avoid them. Obviously, the only way that you can do that is to be aware of them. Now, if you cannot spot a scam, then you can't avoid it. And there are some that seem very obvious, but sometimes some people are really good at convincing you of things that you never thought you could ever be convinced of. Some people are very, very good at that. And the two most often sentiments here is they're going to appeal to greed and to fear. So they're either going to tell you can double your money in 2 weeks, or if you don't do that, then something bad is going to happen and you're going to be poor. Those are the basic things. So either they're going to appeal to fear or to greed. And there are two things that are always true. If it sounds too good to be true, it normally is. And there is no such thing as a free lunch. I mean, that sounds like a very, very trivial thing to say, but it is true. Again, I mentioned that before. Not even what you got, the food that you got here tonight is free. You have to listen to me. You can't just walk in, and I guess you could, but I don't think Katie would like that. Just get the food and walk out. So therefore, there is no such thing as a free lunch. So anybody who will ever offer you something for free, and that sounds too good to be true, most of the time it is. I'm not saying all the time, but most of the time it is. What are some of these investment frauds? The pyramid schemes, Ponzi schemes are very common. A pyramid scheme is where they're telling you you're going to get an X% of the money if you just recruit new members. Some of these are legitimate because some businesses are based on that. That's not a pyramid scheme. So you gotta be careful. Some business concepts are based on the fact that some person starts and then they're going to create a network of other people, and that network is going to pay back to you. There's nothing wrong with that. It's a legitimate undertaking. You're just going to ask yourself, what are you recruiting members for, and what is it that they're supposed to be doing? Ponzi scheme. Everybody read about Madoff. I mean, that's the Ponzi scheme of all Ponzi schemes. You take money from new investors to pay off the early investors. That's what he did. You promise them high returns, and the way you do that is you just take the money from other people and pay off the earlier investors, who then think that they're making good money, and they're going to give you more money, which then you're going to use to pay off somebody else. And you're going to just continue on until this whole thing is going to collapse. It's always going to collapse. One of the interesting things about these schemes, particularly Ponzi schemes, obviously, if you start something like that, like Bernard Madoff did, you never believe that you're actually going to get caught. Otherwise, you wouldn't do that. But everybody gets caught. There's no way that a Ponzi scheme can actually continue on infinitely. It's going to fall apart at some point. The problem is you don't want to be caught as part of that. When that you got caught in this, and there are ways to avoid that. Precious metals, and I apologize for I think there's a spelling mistake in the ones that I sent to Katie, where I called them precious metals. They're actually precious metals. Gold, silver, the most important ones, where you're being asked to buy gold or buy silver. Got to be very careful with these, especially when you get these on over the internet. You always have to remember, when you buy precious metals, these are commodities. There is a sales tax involved, first of all. So just in order to make money, you're going to have to at least recover the sales tax just to break even. And then some. And some of these are not really what they're telling you they are, or they're exaggerating it a little bit. Again, if somebody in this day and age sells you a gold coin and say you only have to pay $10 for it, there's not a lot of gold in that coin. It might look shiny and it might look like gold, but if it is $10, given the price of gold today, it is not going to be gold. So, and it's based on some rules. You can probably, I'm not familiar with exactly what the rules are in terms of labeling a product, but there's probably only going to have to be a very small amount of gold actually in it to call it a gold coin or a silver coin. I mean, just like certain things you can call juice and certain things you can't call juice depending on the amount of juice in it. That's the same thing. So somebody can sell you a gold coin and you think it's a great thing. Another interesting thing is that I've seen, and that's not precious metals, but that's $2 bills. I remember people trying to sell people $2 bills, and they come in this nice box and all of this, and you're paying only $5 per $2 bill. Why in the world would I be paying $5 for a $2 bill? If I wanted a $2 bill, I can go to the bank and ask for one. They're not in the circulation a lot, but they're regular means of payment. Any store is going to accept a $2 bill. There's nothing special about them other than that they're not given out a lot. They're not in circulation. You don't see them very often, but that's all there is to it. But because you don't see them very often, some people think you can sell them and sell them as some sort of collector's item. Again, if you can convince somebody that is a collector's item, there's no fraud behind this. You can ask their ethics, but there's no fraud behind it. There's nothing illegal about this. But you have to ask yourself, again, if somebody's selling me a $2 bill for $5, what's the logic behind that? And then I'm telling you, well, it's going to be worth a lot more at some point. It's only going to be worth more at some point if it's completely taken out of circulation, and everybody who has one now is all going to spend them, and the Federal Reserve collects them all, and then there's 100 left of them. Then they have a value. If you find somebody who wants to buy a $2 bill, that's the other thing. It's not something that you just go to the store and say, you have a $2 bill, how much are you going to, I heard it's worth $1,000. What you heard is fairly irrelevant. It only matters of what somebody's willing to give you for it, because that's the value of it. There's no market for these things. So, gotta be very careful about these things. Collector's items. What is a collector's item for some person, nobody else cares about. It's one of these things. How much did they auction off the Scream yesterday? The painting for like $20 million or something. So somebody buys it for $20 million, hangs it in their basement in a room that they can only go into, because if you keep it up there somewhere in the living room where everybody can see it from the outside, it might not be there for long. And so you're going to have to put in a room where nobody can get to it. And if you're trying to sell it, there's no way to say that you're going to get $20 million for it. What happens if, they saw with the Mona Lisa, where they all of a sudden found one where they said, well, that was made by one of his pupils, and it's just as good. So now we're not so sure anymore. Now there's two Mona Lisas. So it means that the value of the original one just took a major dip. And you never know. So collectibles are always very iffy. Again, I'm not talking about fraud here in any way. That's just a matter of thinking about as far as investments are concerned. Stock swindlers, penny stock investments. I'm sure I'm not the only one who gets those emails about you can buy this stock for a cent or 2 cents or 3 cents. These things are called pump and dump schemes. What that means is that the people that are pushing those, now these stocks exist, don't get me wrong, they're not companies that do not exist. They are actual companies. But what they do is the people that are selling those to you, they bought that stock. And then they're going to sell it to you and say, well, everybody should buy these. Go and buy these. It's a great investment. If everybody actually follows up and buys them, it's going to drive up the price of their stock. At that point, they are going to dump their holdings in the market to actually realize their profit. And as a result, the stock price is going to go right back down where it was, because a penny stock is a penny stock for a reason. If a stock sells for 2, 5, 10, 50 cents, there's a reason for that. That's because the company is not worth more than that. Or there's not very good prospects for that company. So there is again, that actually is illegal. You're not supposed to do this. You cannot promote a holding or promote buying a stock that you hold. That is illegal. That is actual fraud. So just like when somebody goes on television and makes investment advice and tells you this, like Kramer, he cannot own the stock that he promotes on CNBC. He cannot do that, because if he did that, that would get him in a lot of trouble. You cannot do, because you're telling people buy that stock knowing that you have it, knowing that it's going to drive up the value of your investment. You are not allowed to do that. That's against the law. But again, they look like, oh, it's only 5 cents. If I buy for 5 cents, maybe it goes up to 7 cents or 10 cents, and I double my money. Sure, you could, but chances are it's not going to happen. Chances are it might go down to 2 cents. And then, you lost 60% of your money. So you're gonna have to be very careful with this. Phony international investments. One of the things that is always true, if you do not play the lottery, you are not going to win the lottery. So every time you get an email that says you won $1 million or £1 million or $1 million whatever because your name was drawn, if you did not play in that lottery, then you are not going to win. There is no such lottery that just randomly draws people's names and gives away millions of dollars or pounds, whatever the currency is. That is the first thing. If somebody says, I have a great investment opportunity somewhere abroad, and I have a colleague at UAB who always introduces themselves as coming from the country where you get all these investment opportunity emails. He's from Nigeria, because most of these emails come from Nigeria. So we have this investment opportunity, and the thing is, we all laugh about this, and why would anybody ever do that? But if nobody were to do it, you would not be getting those emails. And I actually know somebody told me about their brother who actually fell for one of those and actually flew all the way to Nigeria to meet with the investor. So again, there are people that are going to buy into this. Now, this has been much more advertised and talked about now in the media than it was 5 or 10 years ago when this first started. People were falling for these a lot more than they do now. But they all come by email, and I'll talk about that in a minute, why they come by email and not by mail. Affinity fraud. This is your Dateline story. Now, every time you hear a story on Dateline about some church that was talked into issuing bonds, and all the congregation gave some of their life savings to buy those bonds, and it turned out that the person who collected the money just ran out of town with it. That happens all the time. Their affinity fraud targets members of an identifiable group, mostly churches. They're right into town, they get into the group, they talk them into the ear, from the pastor or whoever, say, yeah, I really would like to have a new church. And then they say, well, I have a great idea how you can do that. If you just issue these bonds, and again, just to make that sure, not about 95% of these things are legitimate. Now, if your church issues bonds in order to build a new church, most likely that's going to be okay. Now, there are ways to check that out. But, you know, there are times when some stranger runs into town, convinces the congregation that he or she found a way to raise a lot of money, you know, because they're gonna issue those bonds, so you're gonna get an investment, you're gonna earn interest on that investment, and we're gonna use that money to build the church, and then we get a bigger church, and we have more people and more donations. That's how the money's gonna come back and all that. And a lot of times, these people just collect the money and they disappear just as quickly as they appeared. That happens all the time. It happened to a few churches right here in Alabama that fell from. Actually, one was down there near Montgomery, was actually featured not on Dateland. I think it was on the one on ABC, whatever, that 2020 or whatever that shows. That's where it was featured. So this happens. This happens all the time. Bogus franchise and business opportunities. Again, if somebody has a business opportunity and it sounds too good to be true, it normally is. And we hear about this all the time. And this is something that where you target where rich people with more money than sense are targeted, and they're going to invest in it. I mean, how we read about athletes, for example, that are broke because they made all these investments in all these different businesses, whether it's restaurants or nightclubs or whatever it is, and all of these things just went up in smoke, and they're bankrupt. 65% of all NBA players are bankrupt 5 years after they retire. They make millions and millions of dollars during their lifetime. They're bankrupt. So it doesn't matter how much money you have. You know, you can have a lot of money, you can have a little money. Somebody's going to find a way, or going to try to find a way to scam you out of it. So you got to be very aware of that. Telemarketing fraud is still the most popular one. This is when they call you, when they send you emails. Those are the most important ones. There's a great movie. It's called Boiler Room. It's about stock fraud. It's actually about pump and dump schemes. And there's a great scene, and we don't have any audio for them. And I want you to get that movie. It's an R-rated movie. It's R-rated for a reason. So a lot of bad language in that movie. But it's a great movie about these kind of stock schemes. It really tells the story well, and where they first convince an unsuspecting investor, having all kinds of techniques about, what are you going to do with your money? Well, and then he says, well, my wife doesn't want me to invest in this. Well, why are you listening to your wife? You should make your own decisions because you make them. I mean, the typical schemes that you get. You should make a risk. You should do something for yourself. And this is almost my superior, my boss. They're all investing. Everybody in our office is investing in that deal, and so on and so forth. The typical lines that you get in those kind of things. They want you to immediately make a commitment the moment they call you. They say, okay, you're going to have to decide now. They say, well, I really want to think about it. No. If you don't decide now, it's going to go away. That's one of the warning signs. If you want written documentation about it and say, well, we really don't have time to send it to you, that's another warning signal. They're not using US mail. That's why they don't want to send it to you. Because if you use the US Postal Service to deliver some fraudulent material, you are committing mail fraud, which makes it a federal offense. All of these other things are state offenses. This is a federal offense. If you get convicted on a federal offense, you're actually going to have to serve the whole term. You're not going to get out after because the federal penal system has enough money to keep all the prisoners in prison. And they're going to keep that's why they don't use, federal crime is a different level of crime over a state crime. That's why nothing illegitimate is ever going to come through the mail. It's one of those things, if it comes to the mail, that doesn't mean it's good. Don't get me wrong. Just because you come to the mail, you should all sign up for it. But what you know is that it's not a fraud, because the risk of getting caught in a mail fraud and the punishment that comes with that is much higher than when it's just, quote unquote, just through state law. So that's why they really avoid the US Postal Service. And there are very strict regulations. Nobody really ever enforces them too much. Know that only things that are delivered by the mail carrier can actually go in the mailbox. Even though people put all kinds of other things in. Theoretically, every flyer that goes in your mailbox that was not delivered by the mail carrier, that's fraud too. They're not allowed to do that. That's why they can stick it on the outside of the mailbox or throw it in the front yard, but they cannot actually put it in the mailbox. If it's a US Postal Service approved mailbox, only things that the US Postal Service brings is allowed to go in there, so that you know that this came from them and it's legitimized that way. So there's the reason behind that, and that's always a good sign. That's why that's why the best thing that ever happened to telemarketing fraud is the invention of the internet and email, because that makes things so much easier than having to call everybody. It is so much easier to send out 5 million emails to email addresses that you have purchased. You can purchase these things. If you give somebody your email address, they will sell it. Or I will not say everybody, but there are people that are going to sell their mailing lists, and there are people that are buying them. And all this sort of something. How do you think people get your names and addresses when you get on surveys? And you always know that it's coming from some mailing list when they misspell your name. And you always know that's the same mailing list and they misspell it the same way. Every time. You know it's not legitimate. By the way, that's another thing to figure out fraudulent emails. Spelling mistakes. Spelling mistakes happen in those emails. Now that's a very common thing. Don't worry about the email address where it's coming from. That's easily forged. It might say up there that, for example, the name of your bank. Few things. Your bank is never going to ask you for anything by email. They're not going to ask you for anything over the phone. If they need personal information from you, they're going to either send you a letter or they're going to ask you to come in and talk with them. They're not going to say, okay, I really, you filled out this account application, but you forgot to put your social security number on. Can you just give it to me over the phone? They're not going to do that. The IRS does not send you an email saying, well, you owe us $2,000. They're not going to do that. No. What a bank, for example, would say, okay, there is some problem, there might be some problem with your account. Please log into your account in your safe mailbox that is set up. If you have an online account, there's a mailbox that they have on that side after you logged into your account. That's where they send you communication. They will never send you any kind of sensitive communication in your regular email address. It's not going to happen. Same is true for PayPal. That email address is forged all the time, and you think you're getting something from people. You need to update the account information that you have, or this or that. Never going to happen. Never going to happen. If they say you need to update your account information, they're going to ask you to log into your account. Do not click the link in the email, because that might be a virus. That they're just put in there. And if you click on that, then the virus is going to get into your computer and going to collect information from your computer. Got to be very, very cautious about these things. When I talk to high school students in particular, and I use Facebook. Well, people do too, but I don't put my phone number on there, and I don't tell everybody exactly where I go, when I go there, and how long I'm going to be gone. It's just, I always tell them, if some stranger came to you on the street and asked you for all that information, how much of that information would you actually give out? Would you give them your phone number and your address and when you're going to go on vacation and all these things? Or are you just going to say, well, I don't know who you are, so I'm not going to give you that information? We tend to give out a lot more information over the internet or over our computer and emails than we ever would have given out any other way. And we got to be very careful about that. If somebody asks you on the phone, could you please give me your social security number? If somebody called you on the phone and said, well, you won £1 million in the lottery, would you believe that? somehow we believe it when it comes in an email. If it's in writing, it sounds much more believable than if somebody actually calls you about it. So we gotta be very, very suspicious, and we have to ask questions. Again, a lot of these things are perfectly legitimate, but they will ask you questions. They will answer questions that you have. Nobody that is legitimate will ever push you into anything. They're not going to say, well, you really have to do this by today. I can't, because if you wait until tomorrow, that deal might be gone. That this is not a legitimate deal. If you have questions afterwards, and they say, well, just sit on it, it's going to get better, and so on and so forth. Those are always alarm bells that should go off when things like that happen. When they try to stall you, be aware, be very aware. A lot of bad things can happen. So stop and think before you act. Again, if it's too good to be true, it is most likely too good to be true. Study the deal and get input. Don't make rash decisions. If you want somebody who's trying to sell you something, ask them for an investment, ask them for a prospectus. Study the prospectus. Read up about it. Google it. Whatever you need to do. And there are some other things that you can do with regulators, which I get to in a minute. Understand what you're getting yourself into. Not just to avoid fraud, but just in general to make bad investments. As one of the pieces of wisdom that Warren Buffett once said is he's never invested in any company whose product he did not understand. That's a very good philosophy, but I don't know what they do. I shouldn't give them my money. If somebody offers me a business opportunity and I have no idea what this business is about, I should not be writing a check to that person. I should be saying, I really don't know, or I need to check, or I need to study this. Send me some material so I can read up on it, and I will let you know. Maybe I can ask somebody else's opinion, get a second opinion, so on and so forth. Again, anybody who's not willing to do that has something to hide. Again, it might not be fraud, it might just be they know it's not that good an opportunity. They was looking for somebody who is naive enough to buy it. Not necessarily illegal, certainly unethical, but not necessarily illegal. You wanna take your time. And again, critical thinking, very, very important. Don't believe every word somebody tells you. When it comes to these deals, be very, very, very cautious about this. You're getting flooded with these things on a daily basis. Again, most of the time, and if you just think about yourself, how much of the things that you get in the mail, just in the mail, sound like good deals? Once you read the fine print. If you read all the fine prints of all these things, even if it's about, okay, if you sign up for this, we're gonna give you 2 free night stays in this resort. You're gonna get 2 free night stays, but you need to see how you get to the self, and then you have to listen to a 5-hour sales presentation and all kinds of other things. You're just gonna have to read the fine print. Again, there's nothing illegitimate. It wouldn't come in the mail. That's always a very good first litmus test. If it comes in the mail, it's probably not going to be fraud. That doesn't mean that it's a good thing. So you got to think about it. Does it make sense? Is it too good to be true? Anybody who promises you 100, 200, 300% return, it's very possible that you could get a 200, 300, 400, 500% return on your investment. Chances are, however, that it's much more likely that you're going to get no return on your investment or lose all your money. Because if somebody who promises you a $400, $500 legitimate return, that means they're going to have to take quite a bit of risk to make that happen. The basic risk and return relationship. The more return you want to earn, the more risk you're going to have to take. So the more return somebody promises you, the more risk there is involved with that. And you read the fine print. How much is it actually going to cost me? Now, what is the actual deal? It's the same with these these commercial infomercials on television. If you ever notice, nothing ever costs more than $19.95. That is because that's the critical number. They know that in order to get people to buy it, it can't cost more than $19.95. And then I always have to be able to throw in some extra deal. Where I'm getting is them, but I'm also charging them $10 for shipping and handling for something that costs $2 to ship. That's where the money is made. It's not made on the product. And the shipping and handling, by the way, is not refunded, as you might have noticed too, on those deals. But you need to, and again, there's nothing fraudulent about these deals. They're legitimate products. They're legitimate products, but there's a reason why they're $19.95. Because if you put an infomercial on and you're trying to sell somebody something for $99.95, it's going to be very difficult to sell it. But if you just say, well, it's just $19.95, I'm willing to pick up the phone or go on the website and buy it for $19.95. That doesn't sound so bad. But again, do you getting actually what you think you're getting? Is it worth it? It might be, it might not be. That's for you to judge. But this is what you have to think about, and it's even more important when it comes to financial investments. Now, what can we do about it? How can we, if we think that we're being scammed, there are people that we can talk to. FINRA, the sponsor of this program, Financial Industry Regulatory Authority, they regulate anything brokerage related. Now, one of the things that you have to be aware of, when you open a brokerage account, you're signing away your right to sue. What you have a right is for FINRA arbitration. You're signing away, and the difference is, it means what's the difference, if I go to a court, if I go in arbitration, well, the difference is, and I've been involved in quite a few of these arbitration hearings, you have the same case, because normally, it might be some particular investment that a whole bunch of people bought. You have like 100 cases, you have 100 different verdicts. It depends on that panel of people that sits there, which is depending on the size, either 1 or 3 people, and they decide. There's no precedence, it's their decision. If you go to court, if you get a ruling on that particular case, and then you present the same facts again in court the next week, you're going to get the same ruling. The judge is going to say, well, there's a precedence for this. This is what we're going to use. That's not true for FINRA arbitration hearings. So, but you sign your right away to when you sign a brokerage agreement, you're gonna, in the fine print, it's gonna say that if there's an issue that you have with your broker or with the investments that they make, you have the right for a FINRA arbitration hearing. So you find yourself a lawyer, and they can file a case with FINRA. So these things go through FINRA, they do not go to the court. Now, when it comes to fraud, it gets a little bit differently. Now, once we're starting violating securities laws, as a federal laws, then we're getting to a different level, but it's a level of missing some disclosures or not exactly doing what you were supposed to do, not particularly spelling out the risks that you're taking and so on and so forth. That's not going to go. That's not going to go against the federal court, and there's just a monetary judgment. There's only a monetary judgment. There's no such thing, it's not a felony or anything like that. It's just a monetary judgment by FINRA. Doesn't go into. Now, as a broker, however, that goes into your record. Every time you have to appear at a FINRA hearing for something that you're accused of, that goes into your record. You can go to the FINRA website and you can type in the name of your broker. And they will give you all the licenses that your broker holds, and if there have been any action filed against that particular person. That is publicly available information that is being disclosed to you. So if you're not sure about somebody, you can check them out. If you don't want to do it on FINRA, you can go to the state securities commissions. The Alabama Securities Commission, if you go to their website, and I forgot to put that on there, the Alabama Securities Commission has an 800 number. First thing you see when you put up next to the picture of the chairman is an 800 number that you can call if you have any doubt about anybody who's trying to sell you something, because if they're trying to sell you something in the state of Alabama, any kind of investment related, like affinity fraud, as I talked about before, somebody rides into town and tries to convince a congregation to invest in church bonds, you can give that name to the Alabama Securities Commission, and they will investigate that person for you to make sure that this person is legitimate. And they will tell you, Alabama Securities Commission will tell you that you should do that every time. If they cannot produce any kind of evidence that they've done that before, that they have a track record, whatever it is, you can go there, they will tell you, they can find out if there has been any action filed against that person anywhere in the country, so that you know. So they have the authority to go and look at all these records, and they will tell you. That's one of the main things that they do, because the main thing that they're trying to do is to make sure that people do not get scammed. That's why the Alabama Securities Commission sponsors these kind of workshops too, because they want to make sure that you don't get scammed. Because that's much more important than being able to recover something. You don't want to. As a regulator, you do not want people to lose confidence in the system. That's the whole idea. What they're always trying to do is create what they call a level playing field. That you feel that you have the same rights as everybody else, and that you have the same fair shot as everybody else in that business. That's what the purpose is. That's the purpose of securities laws that come to the U.S. Securities and Exchange Commission. They oversee securities laws. That's a federal agency. It is it's housed in the U.S. Treasury. It's a federal agency. FINRA is a self-regulatory organization that is not a federal agency. FINRA is an organization that is put together by all the participants in that industry. It's an industry association of all the investment companies in the brokers in the country. It used to be the NASD, which stands for National Association of Securities Dealers, and the New York Stock Exchange. Both of them had their separate regulatory bodies, and they merged, and they created FINRA. That's what FINRA has only been around for about 10 years now, maybe a little bit less than that. So it's a relatively new organization, but again, the two organizations that merged to create FINRA have been around for a long time. And their purpose is to make sure that everybody is doing what they're supposed to be doing. Now, you could always say, well, the FINRA is paid effectively or kept by the investors or by the industry and not by the people that buy the products, so they might be biased. I don't know about that. I'm not so sure about that. But the U.S. Securities and Exchange Commission is a federal agency. It is unfortunately way understaffed, but staffing gets better. People always said, how did something like Madoff happen? Because there was only one person in charge of all of this and looking into these things. They are really understaffed, especially their enforcement divisions. Again, what the SEC does, they find fraud, and then they're going to bring it to this goes to federal court. What the SEC finds goes to federal court. What state securities commissions find normally going to go to state court. FINRA again goes to arbitration. Those are the different levels of jurisdiction. Depending on where it goes, if you are involved in a case like that, if you are the claimant, generally you're going to have to pay about 1/3 of the money that you recover to the lawyer. That's about common industry practice. So 1/3 goes to the lawyer. And then there are fees, FINRA, for those hearings. There are fees that are also going to be deducted from your award if you get one. If you don't get one, you're still going to have to pay the FINRA fees. Normally half of them, and the respondent has to pay the other half. But that's all totally up to the FINRA arbitration panel. They can decide any way they want to. They can say that the respondent has to pay your lawyer, and that you don't actually have to give up any of your reward to the lawyer. That depends on the arbitration hearing. But again, that outcome can be different every time. Now, one of the things that I've noticed in my time doing this, I've done expert testimony in those situations. There seems to be some sort of pattern that the older you are, and the more you rely on that money, the more likely you are to actually get some money back. Again, you can be 20 different cases. The person that's the oldest and relied the most on that money is probably going to get a bigger reward than the person that fell for the same thing, but still has like the majority of their wealth left. So the arbitration panel doesn't see it as important for that person to get money back. Again, from a pure logic point, it doesn't make any sense, because if you're wrong once, you're wrong all the time. But that's just the way the process works, and everybody needs to be aware of that. That's how the process works. If you find yourself in a situation where you think that somebody sold you something, or your broker did do things to you that you did not approve of, that maybe they bought or sold securities that you never authorized, they are not allowed to do that. Your broker cannot do any transactions, buying or selling, out of your account unless you authorize it. Now, you might have given that broker a blank authorization at the beginning. You have to be very careful about that. But they cannot just buy and sell securities out of your portfolio unless you give them the authority, or her the authority to do so. Very important. If they do that without authority, that's a crime. You're not allowed to do that. It's a violation. So gotta be careful. Gotta be careful about that. And then finally, identity theft. The last part of it. I was mentioned some of it. Protect your identity. That's why you secure your financial records. Yes.
I happened to heard some time ago, some brokerage, they sell his client or her client's security without the client's permission. They so-called turnover. How does that happen?
They're not supposed to do that. They cannot sell the securities. The only way that can happen is if there's a takeover. So in other words, the company that you had securities in has been taken over by another one, and the stocks are exchanged. They might just exchange the stocks in your portfolio. Your broker cannot sell anything out of your portfolio without your consent. Now again, you might have given that person your consent up front. You might have said, yes, here I give you my life savings, and you do whatever you think is good. And it sounds like, why would you ever do that? But trust me, there's a lot of people that actually do that. And then they have the right to buy and sell. Now they still have also fiduciary duty. That means they have to do what's best for you. And if they don't do that, then they can be held accountable for that as well. But otherwise, if you use a broker and you have a brokerage account with a brokerage firm, they cannot buy or sell securities on your behalf without your consent. They're not allowed to. If they do, then you should call or get in touch with one of the agencies that I just mentioned, particularly FINRA or the Alabama Securities Commission. Don't have to go to FINRA. Alabama Securities Commission can always be your first place to go. They are more than happy to help you. That's why they're here. That's their purpose, and they want to help you. But no, the broker is not supposed to do that. Now, secure your financial records. That's what I talked about, shredding. Any kind of information about your identity. Make sure that you check your credit report. AnnualCreditReport.com, every year you can check your credit reports from all 3 major credit rating agencies for free once a year. Check your credit report once a year to make sure there's no suspicious activity in your credit report. Because if your identity gets stolen, it is very, very difficult to get this all back. Mostly you're not going to get much back of what is actually left, but then you are lost, but then you're going to have to get a new social security number. You're going to have to reestablish everything from scratch as far as your identity is concerned. You're going to have to guard your identity. You're going to have to guard your social security number. Do not tell people your social security number over the phone. If somebody asks you for a social security number on the internet, which sometimes happens for credit card applications or some other, if you want to, you can apply for loans and all kinds of different things online. You can ask for a credit score. They need a social security number for a credit score. On the top of the screen, it has to say HTTPS. The S is the important part, knowing that it's a secure server, so that nobody can hack into this and get your social security number. Nobody that is of any way legitimate is ever going to ask for your social security number over the phone. Nobody who's legitimate is ever going to ask you to email you your social security number. They're not going to ask you that. So do not, and I repeat that, do not do that. That is the worst thing you can do when you're at an ATM machine. Make sure there's nobody standing behind you, looking over your shoulder. When you write a check, make sure there are no blank spaces anywhere on that check. So cross all the way out, make the .00. When you write a tip on your in the restaurant, make sure you put the zeros at the end, also that nobody can add something to it. Now these are all very simple things to look, but if you give somebody room to change something on your check, there might be somebody who is tempted to do that. Maybe the check comes in the wrong hands and you didn't, write it. That's why you're supposed to write out how much money you write on the check, and not just the amount, but then you write it out in letters. There's a reason for that. And the thing is, once something gets changed on your check, we talked about that earlier, how you do not get checks, how checks clear very quickly because they're cleared electronically. The moment something has been changed on your check, either you did it or somebody else, if you just put the wrong date on there and you scratch it out and you write it on top, it cannot be cleared electronically anymore. It's going to have to be sent to a clearinghouse, which is normally Federal Reserve, and they're going to have to clear it manually. Those checks take a lot longer to clear because then I have to actually check it. Otherwise, if there's nothing changed on there, then you just run it through the scanner and it clears within a day. If there's anything changed on there, and it's always one of those practices, if you write a check for an expense, if you wanted to do something really unethical, all you got to do is, make a little change on your check, and it's going to take a lot longer for that check to clear. And it's a very simple thing. You shouldn't do that, and I'm not saying that you should. I'm not advocating that, but it's something we'll talk about ethics in business. That is one thing where you can make sure that your expense in particular, if you have to pay a bill, takes longer to clear, is if you just cross out something. That makes the check clearing process take a lot longer. That's just the law. Yes?
Even if you initial is still?
Anything that you can initial, that doesn't matter. If you scratch something out, it's still not the original check, so it cannot be cleared electronically anymore.
What's the words for the dollar amount and the dollar amount don't match? Which one are they obligated to pay?
That's a very good question. I think the words.
It's the words.
Yeah,
The words.
yeah. But again, you still also, there. And I remember now there are pens that you can get, and I remember being at a credit union annual meeting where one vendor was giving away those samples of pens that cannot be erased on a check. So because some of the pens that you can erase and things like that. So you want to make it as difficult as possible for somebody to actually do it. I would say the safest way is not to write a check. But that's just me. But I know that a lot of people like writing checks. But you gotta be very careful about these things. And that's why you have to, when you write a check, you've gotta follow up on it. And when your bank statement comes, check. That's why you need to balance a checkbook. That's why you have to write everything down. Check it with what's showing up in the bank statement. Make sure it's the same. You can ask them, and if you have online banking, every check, the image is going to be on this website. You can just click on it and you're going to see the image front and back of that check. So you know exactly where it cleared and who submitted it and so on and so forth. Yes?
Are the electronic checks kept electronically indefinitely?
I don't believe so. It's up to the bank. You got to check with your bank how long they keep your records. Sometimes you can, and theoretically, you could download that file and keep it yourself if you wanted to. It's a PDF file normally, and you can download that if you really wanted to do that. But the thing is, once the check has cleared and you are fine with it, and you check it against what you thought you were paying, there's no reason for you to actually keep that, because then that transaction is done with. Once it's cleared, nobody can clear that same check again. There's a record of it now, so nobody can come with that same check, same number, same account number, some bank routing number, and try that again. It's not going to work. So that's why once it's cleared, you don't have to worry about that particular check anymore. Generally speaking, the whole message of this is be vigilant. Again, you don't have to be like my grandmother used to be. You didn't trust anybody. She would not open the door for anybody, and she would hide her money literally in a cigar box until I was able to convince her. Now she is from Germany. She lived through major inflations, so she kind of distrusted banks to begin with. But it took me some while to convince her. There's nothing wrong with that, obviously, to put your money in the bank and all of that. But be vigilant. Again, the simple rule, very trivial. If it's too good to be true, it normally is. And please keep records and remember where you keep them.